Looking at charts can be absolutely brutal, but I'm going to show you a secret to make sure you're winning more of your trades. And it's going to be very simple. Let's get to it. So the first thing I want to say is the premise of this video is understanding how to trade specific directions and understanding what's happening when you're trading those directions. Now, for myself, going into the beginning years of my trading, the biggest thing that I had was understanding when I had the most success. Because once I understood that, I was able to thrive and really pinpoint when and where I should be trading and where I made the most money. And then I kind of eliminated trading those other times. Because I'm going to tell you right now, this isn't really part of the video, but cash is a position. You don't have to be trading at all times. So when we look at something like this, and we're here on the 5-minute, right? You look at something like this and you're like, oh, well, I can make money to the upside and then the downside, and it's back and forth, back and forth. But I'm here to tell you that sometimes this is the worst action to trade, and this is where you actually lose all your money, right? So if we zoom out to something like, the quote unquote, the weekly, you get a really better answer, right? You have the clear downtrend of 2022, and then, you can't even argue that 2023 has been a clear uptrend and one of the best bull runs that we've had in the recent years. And if you look at it from this viewpoint, there's really not too much chop. There's not too much consolidation unless you go back into February through basically early March, right? A lot of good action, a lot of breakouts, and you could have made a lot of money. So today when we cover this, we're going to be really attacking, understanding this trend, where to be focusing on the market, why other indicators mislead you and really help you lose money, and then going into how to establish this and implement this into your own trading. One thing I will ask though, I would appreciate if you like and subscribe. This is my secondary channel. We have option drops, the main channel. We cover futures every single day. Trying to get more education, more current event things that I find interesting on the stock market. So feel free to subscribe. As we start breaking down what I call the trend and the overall movement of the market, I want to explain a few things, and I want you to keep this in the back of your mind. The goal is to increase the odds of our success over time and to keep ourselves profitable. People think about the trading game as an offensive game to where you're taking someone else's money, but I argue it's taking what you're allowed to get every single day. And some days the best trade may be to do nothing because it's within that trend. So I want you to keep that in the back of your mind as we jump into this topic. As stated before, you really want to focus on the higher time frames. And this is something like the 5-minute, which is where I do a lot of my intraday trading. But when we look here, I don't believe you have a clear answer, right? You can see that we're trading in this little range from the highs of 15.2, and this is futures, so the Nasdaq, and you're trading in this, and you get almost like a random breakout, and then you push up, right? But I push you to go to higher time frames, and you're going to see the answer. And what you do is it's a top-down approach. So, and again, you're not going to spend too much time on something like the monthly, but when we look here, we can clearly see the trend and the structure that's playing out here, okay? And as you look here, you can see, again, just quickly drawing the trend for you, as you can just go back and see, this was clearly a downtrend structure. There was no arguing this, right? We can all agree. But the question, though, is when you start to break out of this, right? Something has to change, and you have to be viewing the market a little bit differently. So where you should be trading and where I was trading during 2021 into 2021 into the end of 2022 was primarily to the downside. And as we look here and you go to the 4-hour and you start to identify, what's really happening. Actually, let's go to the daily real quick. What's really happening in this trend? It's really simple, right? You're trading clearly to the downside, and the whole reason why you favor trading to the downside is because you're making more money trading and shorting the market, right? Because the market's spending more time going down per day, right? If we look at the overall days down versus the days up, you had more days with sell-offs than you did to the upside, clearly in the downtrend structure. So the argument here that we're making is, especially for new traders, don't try to trade the chop back and forth, because I know what will happen to you, and I know what's happened to me in the past, right? People try to trade the down, like, okay, well, we got the bounce, so now we move up, and then we go up and down and up, and you can try. You probably will try no matter what, right? But the problem that happens here is it's not always picture perfect. Just like here, if we really look at the overall trend that was formed here, it was not perfect. We had a little bit of wicks, a little bit out of it, and people were complaining and getting upset. But as you can see, the structure just wasn't quite perfect, but it was still to the downside. Okay, so when we look here, we want to start with that top down. Now, as we zoom in here too, we're going to go to something, again, like a little bit closer to the session chart. And so as we come into these sessions, the focus, again, you will go through periods to where, yes, you have the upside, you get the push, and you might not take that many trades throughout there. But the goal is not to catch every move. The goal is to consistently be making money on your account. And so as we go through a few more of these topics and a few more of these tips, you're going to see how to identify where to start going short. We also do that. I do want to highlight that, right now over the past 5-6 months, the primary goal of mine has been to trade the upside. And you can actually see we're so bullish here that we're actually breaking out of the structure. But this is a daily chart. You can go into the weekly as well. It's still there. But you can see that this has been the overall trend. And again, the focus has been to trade the upside right now during this trend breakout, the trend flip, right? Why? Because you're spending more time breaking out to the upside, more time obviously scaling up to new local highs than spending time going down. So when we're getting these small chop ranges to the downside, I'm not looking to trade that. That's not where I'm going to make my money. I'm going to make my money on these big green days, right? That's where I want to focus on, right? You still have stop losses. And if you want to get a better example, just go back to previous markets. Look at 2021. Look at 2020. Look at 2019. Look at 2018. You're going to notice similar structures all throughout time, right? You have your bear market, but this is a once in 20 year, once in 15 year opportunity that rarely happens. So understand what the market's giving you and understand how to capitalize off of that. Now, the next two things we're going to talk about are going to be key indicators to look at within these timeframes and to look at within these trends, because they're going to give you more confirmation. We're going to talk about higher highs, higher lows, lower highs, and basically just confirming the structure that's being established there, whether it be a bull flag, ascending triangle, or anything in between, to give you more confirmation to get back into a trade or to continue trading in that specific direction. Now, you're probably asking what constitutes, the overall trend. Now, obviously you can see, and you're like, well, Tyler, what if you don't have the trend established yet? Like right here. So you can see this is already established. So it's really easy to see, hindsight, very easy to see. Ultimately, what you're looking for, if you're looking at a trend, is you're looking for lower lows for a downtrend and lower highs. So what does that mean? You want to start seeing that this is your low, and then you break below that and you make another low, right? So we're just going to keep drawing this out so you can see. Let's actually get rid of this so you can see a little bit more clear right there. And you push up. And you're just going to continue to see you're stair-stepping down all the way down, right? And there's going to be a really easy trick to see about this. So you get the lower low, lower high, lower low, lower high. And you see the trend. We just keep on doing it over and over. And this is how you identify what is happening, okay? This is how you really get the overall structure of where we're at, right? And then we continue going down. And then to break this structure, what you're looking for, if we're in a downtrend, is making a higher high. So on the NASDAQ specifically, you needed to get back over this swing high that we had here. So even though we were pushing and making on smaller time frames, lower highs here, right? Boom, 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 even the here, and here. You wouldn't get a confirmed breakout until you can actually break that swing high that you had here, because this was your actual swing high that we had previously established from June into August, okay? This was an actual impulse move back to the upside. And if you want to get a view of those, it's a little bit trickier to explain. You can see that on our website. But you can actually see, again, as you draw that trend, you can see you have a few impulse waves off the bottom of the structure, right? This wouldn't be considered an impulse because you get rejected before you can even make a, smaller time frame higher high, and you push right back down. So that's the structure that was formed here. And then as you break above this high, look what happens. Remember this, guys. Remember this big trade we had on the other channel. You ended up pushing up, and you ended up getting almost a 15% move to the upside on NASDAQ in a matter of a week and a half, 2 weeks, right? And so that's overall how this is happening, right? Higher highs, higher lows, easiest way to identify it. And if you ever want to constitute, you have someone that's getting upset and like, well, we're not really bullish. The simplest thing to constantly do, the simplest thing, right? Obviously, you have your trend line. That's all a trend line really is making higher highs and higher lows. But the simplest thing you can do here, guys, very simple, is you just come in, you just see where your lows are, just continue to see. And if you keep making, push downs, swing lows, right? Just look where they are. I mean, it's very simple. I mean, it's not meant to be extremely simple or, too good to be true. But ultimately, that's all this is. It takes and once you spend the time doing this, it'll become second nature to you. I promise. very well has become for me since we look at this almost every day on the other channel. But you can see you're stair stepping and then higher highs, higher lows over and over and over and over and over. And you can just see it's going to continue to happen. This is the way the market moves and the way the market is structured. And if you don't believe me with this the past 2 years, you can go back into 2021, you can go back into 2020, you can go back into 2019, 2018, all the way back to, however far the NASDAQ goes back. So make sure you're looking at that. That's the best visual to get. Now, on top of this, the next thing I want to talk about is going into looking at just the price action on the chart, not even getting too overwhelmed with, is this really a higher high? Is this a higher low? But looking at just previous levels to get that stair stepping action, because ultimately that's some of the easiest trades that I've performed over the past year and a half, just looking at the bear market coming back into the bull market, right? So again, sometimes we overcomplicate these situations, but just make sure to understand this is very simple, very baseline, and everything we do on this channel stacks and builds on top of each other. So again, make sure you get the fundamentals before you move on to something a little bit more technical. This is personally my favorite. This is where I make all my money. Okay, I'm going to tell you this is my overall best structure that I'm looking at. And it's looking at previous highs and previous lows. Now this works, I love this with equities, like when I'm looking at, maybe Apple, Tesla, whatever it may be. I'm going to be marking, I'm going to get the Ray tool. I'm going to mark out previous swing highs. And I like to find where we have the most, like we have a little bit of swing high here, so you can have that as well there. But again, I like to have it just like this so you can see, right? I'm going to go to previous highs of everywhere that we've kind of been and how we're moving structurally. Now, a few things I will tell you. I'm going to tell you right now, okay? I prefer to have these as boxes to have a little bit of wiggle room for maybe some traps, some, wick through, just so you have those. But you still want to have the exact point just so you'll see here in a sec. And this is going to be on a daily chart. You can go to something like the weekly as well to get maybe a little bit more accurate, because the weekly, the higher the time frame, the more respected, that time frame will be. And I'm going to have a great example here in a second as well. So as we just look at the past going trend that we've had over the, the past 5 months, give or take. And as we zoom out here, let me just get rid of all this stuff so you can see. We zoom out and you can see what's kind of happening here. You can see how all these levels continually are being respected. Now, the only one that you had a little trouble with was when you started getting that breakout back in, I believe, February. You broke below. This is the banking crisis, so some really big news. But look where you hold up. You held right at your next level, 11.7, right? And this is almost picture perfect where you start getting the bounce and, of course, mounting over the next previous level, stair-stepping your way up. Now, a lot of the time, we expect every move to be, somewhat like this, right? To where we come into that level, we get rejected, we push back up, we clearly mount very easily within a 10-point range, we move up. But sometimes you're going to have, again, wicks. You're going to have, breakdowns through the level and then break back up. So it's important that we're interpreting the data, again, on higher time frames, getting real information and making sure we can process this without being biased, right? So if you look at something like the weekly too, it'll just, again, become more and more clear the longer you're doing this, because you'll be able to see it, and time in the market will always defeat, time out of the market. So spend your time watching and observing. But the last example I want to show you was QQQ. And so a lot of people were saying that we're going to get this reversal, this crazy downside on the Qs, right? In the NASDAQ, because the NASDAQ's been leading the market. But when we look at the Qs, something interesting happens here, right? Right at previous highs, 1, 2, 3, you can see that right there. Look at this wick you get. You pull back right into it, and guess what happens from that level? Not only do you bounce from it, but you start to get increased volume as well. That's the big thing that starts to happen here. You can go look at our volume video. We'll probably have another volume video coming out pretty soon. But as you can see, volume is pretty stable, and then we hit that level, and then volume increases, right? So you're going to see that all these things tie in together when we're looking at the trend, we're looking at structure, and it's overall going to continue to make you more money here in the market. Now, before I let you out here, I do want to talk about a few things with why we attack the market this way, with looking at the trend, looking at price action, looking at supply and demand, and looking at the overall trends and volume instead of using some of these other indicators. Now, when you go to other channels, they may tell you this indicator is the end all be all, the best of the best. And I'm here to tell you that every indicator will fail eventually. But 9 out of 10 times, I feel when I go into the market with this viewpoint and I'm attacking specific areas and I'm watching to see where we're at and how we've moved before, I understand why we fail, why we continue, and I get a better understanding of each trade. That's why I always recommend journaling when you're at least first starting out, but even over time, it's gonna help you refine your craft down the line as well. So when you look at something like oscillators, you have the RSI, the MACD, and there's TTM squeeze, there's countless indicators out there. The one thing that these won't tell you is what's happening right now. They're going to go off of past data, past instances, but not what's happening in that moment. That's why we love supply and demand, price action, the trading the trend, volume, because those are all happening as we speak. And that's the premise of everything that we do when it comes to trading on this channel. So understand that. Another video coming. See you next week.